Well, Singapore's third quarter economic growth beat estimates, supported by recovering domestic demand in services and construction. Advanced data shows GDP rising 4.4% on year, despite the darkening global outlook. This follows a 4.5% growth in the second quarter and 7.5% in the same quarter last year. Chloe Chu with this report.
Despite the economic uncertainty, Singapore's GDP grew in the third quarter, with some surprises for economists.
Services side did a lot better than we had expected, and within the goods producing sector side, our manufacturing slowdown was milder than we had anticipated. So I suppose taken all together, another better than expected quarter.
Of the services sectors, wholesale and retail trade, as well as the transportation and storage sectors, collectively expanded by more than 6% year-on-year. This was partly due to low base effects as domestic and travel restrictions weighed down on activity. The manufacturing sector expanded by 1.5% year-on-year, slower than the near 6% growth in the previous quarter. The construction sector grew by almost 8% for the same period, accelerating from the near 5% growth in the preceding quarter. The Trade and Industry Ministry says this was mainly supported by the easing of border restrictions on the inflow of migrant workers. But outlook for economic growth remains clouded, with analysts expecting growth momentum to continue slowing in the months ahead.
The growth prognosis for Asia and Singapore still remains fairly uncertain. And this is also very much in tension with the global slowdown and the softening manufacturing and semiconductors demand around the world. That basically means that for Singapore, given that we are a very trade-reliant enterprise taker for the matter, any softening of global trade winds will likely be a key force to drag growth in Singapore.
It's a good set of figures, but obviously good enough to cause labour market conditions to tighten further, and that's where perhaps we are a bit more worried on the price front. We have seen demand for labour still being very strong. There could still be further pressure on wages and certainly on inflation and inflation expectation.
Eyes are on how the upcoming holiday season will help boost the services sector.